Hello dear students. Today I am going to explain you about assets and classification of assets. An asset is a property or legal rights owned by a business to which money value can be attached. In other words, anything which will enable the firm to get cash or an economic benefit in the future is an asset. Business owners can opt to convert assets to cash. Many business assets generate revenue and benefit the owner in the long run. Assets facilitate the running of the business. An asset can be sold to generate additional cash. It is used to produce other goods. Examples of assets are land, computer, vehicle, cash. Some more examples like furniture, machinery, building, debtors, etc. Now let's see classification of assets. Assets can be classified into three categories: non-current assets, current assets, and fictitious assets. So let's understand what is non-current assets. Non-current assets are those assets which are held by a business for a long-term point of view. They are not held with a purpose to resell, but are held either as investment or to facilitate business operations. These assets have life of more than 1 year. As they are for the period of more than 1 year, they are also known as long-term assets or fixed assets. In simple terms, we can say that non-current asset is an asset that the company acquires or invests. These types of investments last for long and cannot be easily converted into cash and can generate economic benefits to the company for more than a year. Examples of non-current assets are land, buildings, factories, furniture, equipment, plant and machinery, etc. Non-current assets or fixed assets are further categorized into two categories: tangible assets and intangible assets. So let us understand what is tangible assets. Tangible assets are those assets which have physical existence, that is, they can be touched or seen. Examples of tangible assets are land and building, machinery, furniture, etc. Now let us understand what is intangible asset. Intangible assets are those assets which do not have physical existence, that is, they cannot be touched or seen. For example, patents, goodwill, trademark, computer software, copyrights, etc. Now next category of asset is current asset. Current assets are those assets which are held by the business with the purpose of converting them into cash within a short period, that is 1 year. These assets are used for day-to-day transactions of business. Current assets are important to business because they can be used to fund day-to-day business operations and to pay for ongoing operating expenses. Examples of current assets are debtors, raw materials, inventories, prepaid expenses, account receivable, short-term investments, etc. These examples will be explained in detail later. Now let us see what is liquid asset. Liquid assets are recognized as subcategory of current assets. All current assets, excluding stock, are recognized as liquid assets. Or we can say that a liquid asset is cash on hand or an asset other than cash that can be quickly converted into cash at a reasonable price. In other words, a liquid asset can be quickly sold on the market without a significant loss of its value. Generally, liquid assets are traded on well in established markets with a large number of buyers and sellers. For example, cash equivalents, marketable securities, which include stocks, government bonds. Liquidity is one of the key factors that determine success in the world of business. Liquid assets ensure a company's ability to meet its immediate financial obligations and operating expenses. In addition, the assets serve as the company's protection from unforeseen adverse events such as a recession or a sudden decline in demand for the company's product or services. Now let us understand what is real asset. Real assets means assets that have value in reality. These assets have market price. This means it has realizable value. These assets can be converted into cash. In these assets, tangible, intangible, and current assets are included. From sale of such assets, if money can be realized, then they are known as real assets. Now let us understand the last category of asset, that is fictitious asset. The word fictitious literally means fake, imaginary, or not true. Hence, fictitious assets means assets which are not actually assets of the company, though these assets are shown in the asset side of the balance sheet. Fictitious assets are the expenses or losses which are not fully written off during particular accounting period. These expenses or losses are spread over more than 1 year. Fictitious assets are also known as spread revenue expenses or deferred revenue expenses. It does not have physical form or existence. Realizable value of fictitious assets is 0. These assets cannot be converted into cash. The benefit of this expense is available for the period of more than 1 year. Examples of fictitious assets are issue cost of share and debenture, preliminary expenses, share or debenture discount. So that's all for today. Thank you very much.